Hey guys, welcome back to the channel. In today's video, I'm going to be providing a longer term market update for where I stand on Bitcoin and be discussing why I believe that now is not the time to be bearish. If you guys enjoy the content, make sure to leave a like and subscribe. Also, by the way, I will leave a link to my Twitter page in the description below. Feel free to go ahead and check that out as well. So with Bitcoin, we have seen a pretty sizable correction over the last few weeks, down about 20% from this local high at $25,000. And in general, I think this is all going to be looked back upon as noise and some volatility along the way for what looks like to be a new cycle, a new 4-year cycle that we have developed here with the lows back here in November of 2022 off this FTX capitulation. And my view is that this correction will most likely lead to a higher low where we will see some sort of reversal. We will start to bounce off of some support and then eventually continue trending up into, say, the longer term time frame, really just hammering in a 4-year cycle low. So what are those levels that we could look to as support? Well, the first one we could look to at the level right around $19,700. Logically, that was the historical and psychological level from the previous market cycle's all-time high. That is a very well-known level. A lot of consolidation in this region, but that also happens to be where the 200-day simple moving average lies. So that is the blue line on this chart, and if I zoom out, you can see that has historically been a pretty important level to be paying attention to for Bitcoin on the longer term direction. For example, when we were above it, we were in this bull market trend. When we lost the moving average, that was more or less the signal that we had started to enter this bear market. We flipped it into resistance, rejected off of it, and ever since then we really just saw the moving average trend down very sharply, the price averaging lower, and then continuing out that process. But what's really changed here with the 200-day simple moving average since the lows back here in the November 2022 timeframe is that it has ended this downwards decline. It's no longer sloping downwards, it's more or less moving sideways, it's flat, and the price has moved back above it. We saw the breakout back above the 200-day average right here in January of 2023 towards the middle of January, and now we're just coming back down. This is the first retest of the 200-day average. Now, whether or not this holds as a longer term region of support, I ultimately don't think will matter. In fact, in the previous market cycles, we have seen the first break above not being ultimately successful, and you can see that if I were to zoom out here to say all the way back here in 2015, we had a breakout here. If I get a little bit more price history on the index, Bitcoin essentially had this breakout above the 200-day moving average, and then it had a move coming back below it. But ultimately, this was just one longer term region of accumulation, and the important thing is that it was no longer resistance like it was during the bear market trend. It was no longer averaging down. In fact, the price was just oscillating sideways above and below it, while the moving average was just flat. So very similar to what we're seeing today, and exactly the same thing happened here in 2018. We did have a big break above it, but ultimately the move came back down. We broke below it, and again, that same thing where the moving average more or less just trended sideways while the price oscillated above and below it. So a very similar thing could happen, but that would be the first major level to be watching out for if we were to experience a shorter term bounce, a shorter term, say, relief rally, or where we could look to for some sort of higher low. The important thing is that the moving average is no longer sloping downwards. It's no longer resistance, which really just tells us that the momentum and the dynamic of the trend in the market has definitely shifted, and we are no longer within this bear market. The next level that we could look to is going to be this level and floor of support that we held in the summer 2022 month, right around $19,000. If I switch over here to the weekly time frame, you can see it's basically the range lows. Very clear here on the weekly chart. That was where we bounced multiple times, came back, all of these weekly candles holding and holding up until the breakdown that we saw as a result of the FTX crash, the FTX saga. So that was basically the floor that we held, and of course, when we broke back above that level, we reclaimed the range and very quickly shot up to $25,000. So this has been a historically important level of support and resistance, and this is absolutely something that we could look to as support if we were to continue to correct in, say, the next several weeks. And this would be the most logical level to expect some sort of higher low. It would be a retest of the breakout point, and it could set up the price action for a very nice looking higher low where we could start to reverse from there and then potentially have a move coming up in the next few months following that. And this is obviously just one scenario that could play out. It's more or less a guide of what could happen with the potential formation of a higher low and what I'm going to be expecting, because I do think that we have reversed this downtrend, reversed this structure of lower highs and lower lows, and that we're actually going to be looking for something else with the trend working in our favor instead. Whether that level is at the 200-day average, which is right around $20,000, or the range lows at $19,000, ultimately, I don't think it will matter in the end. What will matter is that we can have some sort of move coming back down and holding support and then starting to reverse. And then another thing that we could look to, and this would be the last level that I'm going to be expecting support off of, is the 20 and 21 weekly moving averages. So the 20-week moving average is the red line, the 21 EMA is going to be the green line, and I like to consider them as a band of support when the price is above it. You can see we're coming back down. This current weekly candle is retesting that band after we saw the breakout right here in the same January 2023 timeframe. So this was resistance back here in the bear market. We had a rejection following the breakdown in the beginning of 2022, and then flipped it into resistance, continued to flip it into resistance, and then we had this last rejection just before the FTX crash. So we saw it as strong resistance, but the price is back above it. Now we're actually retesting it. If it holds as support, then we could start to have, you know, that higher low in this region. It would look like a very clean flip from resistance into support, and then we would just have the moving average continue to average up, really just, again, solidifying that longer term momentum shift. So the fact that the price still has many opportunities to bounce at support and form some sort of higher low is why I don't want to be bearish here. The only reason I would get bearish is if all of these support levels fail to hold. If the price is losing the 20-week moving average, it's losing the 200-day moving average, it's losing the range lows and the breakout point, if it's coming back below and losing all of this, then we can start to have a little bit more of a cautious view on the longer term trend, because then we wouldn't have much support. There's not too much support in this region because of how little price action was spent within this, in this general 17 to 16K range. So if the price were to have a move and stay and remain below there on, say, a weekly candle close or even a monthly candle close, that's when I would start to get cautious. But until then, we do have the momentum and the trend to the upside, just because of the moving averages that we can look to, the breakout point still being within this general range, and the fact that the downtrend has definitely looked like it has at least ended, and we might be entering some sort of accumulation or sideways period before the start of a new bull run. I hope you guys enjoy the content and the analysis, and as always, I'll see you in the next one.